Folks, it's finally happening as we head into 2024. Florida is ice cold. Folks that have been moving here en masse over the past 10 years, really disinterested in higher taxes and snowfall and all those things that really kind of bring people to Gatorland. Folks, you gotta listen. We are seeing a massive migration and iciness of buyers that are absolutely uninterested, even at these mid 6% 30-year fixed rates. And as we head into the middle of 2024, folks, inventory is higher in Florida now than at any point since July of 2020. That's right, we are gonna see 4+ year highs. And folks, you gotta understand, we're cruising into the beginning of 24 with already elevated inventory. We shot in the past 4 months, our inventory has climbed nearly 30%. We were hovering around 80,000 listings just back in the early fall months of the last year. We're already now pushing towards 115,000 listings. To give you an idea, folks, pre-pandemic, Florida could only handle around 130,000 listings. That was the typical math for our market. Now, folks, we ultimately see that buyers across the state have absolutely pulled back. I recently also pulled data. I took all the IRS migration data, I loaded the most recent up till last year that I could get, and all across the major metros, I'm seeing the fact that people that were moving here largely from Chicago, from New York, we're seeing a lot of the inbound movers from those more expensive states starting to ease off, folks. And this is incredible because one of the largest arguments up till now for everybody looking at the home price in Florida and saying, hey, you know what? It's gonna be super hot. It's never gonna fall. The prices are gonna be strong forever. And even then, folks, most of the metro areas in Florida gained ground last year. But folks, we're heading into a new world this year. As we go into the first half of this year, we are now entering a market where many buyers statistically can get in the market. They have the money in the bank. They actually are the rare that can afford it. Folks, Wall Street Journal just did a report this week outlining the fact that many affluent people are now renting by choice. The base of individuals that are actually looking at the marketplace and saying, hey, I can buy, I have the funds to buy, but I am uninterested. The growing math of people that have no interest in buying in the market, that is gonna be a massive shift. And we're gonna see what happens as we try to cruise in, because folks, listen to this, hear me on this. What's fascinating about where Florida sees itself going into 2024 is the fact that we have amassed so much inventory coming into the beginning of the year. Now, folks, usually we come into the state with a whisper. There's not a whole lot of inventory. As people get into moving season, as they file their taxes and they bring some of that refund money home, as their kids are getting closer to being at the end of the school year, lots of real estate comes into the market seasonally every year. As we come into 2024, we expect that. But folks, you gotta understand, we had a lot of inventory being pushed to the market. And folks, I'm hearing crazy signs all over the market that things are in massive shift. Now, depending on where you are, you need to understand that you may be dodging a bullet. Folks, to give you an example of what I'm talking about, I looked at more than one community at different price points. Many of these communities sell about 3 homes a month, and they have 70 home sellers actively fighting to get their home sold against all the other neighborhoods. Now, folks, you gotta understand this. Home sellers in the short-term rental market in my area, particularly in Central Florida, are gutting the price in the face of so much competition, so many people being on the market at the same time that they have no choice but to cut the price. So in Florida, let's say if you buy a furnished townhome, that's about as low cost as it gets. There's a community in Davenport that I looked at that has a ton of 3 and 4 bedroom townhouses, which gave me a very good view. Folks there that were getting $330,000 for their townhouse early part of 2023 are now recording them for $270,000 and $280,000. Folks that were getting $300,000 and $310,000, they're now selling for $250,000. On the high end of the range, I saw a 2-story pool home not too far from Disney that sold for $1.1 million, setting the market high. And right now, at the exact same time, you can buy that same model with a pool for $899. A difference of nearly $200,000, literally over an approximate time about 14 months from each other.
Record high mortgage levels are starting to take their toll. The mortgage rate is at 14.75%.
Ask not what the Great Reset can do for you. Ask what you can do for the Great Reset.
Now, folks, why would you want to be a landlord in Florida? How does a short-term rental pencil out? I talked to an owner this week, a gentleman named Brian off of this very channel, who bought properties in the Winter Garden area for short-term rental, purchased them back in 2016, has them leveraged with financing, and told me that he's really never seen a profit since the day he purchased those properties. Now, folks, think about who would buy a short-term rental right now. You're going to look at the marketplace. You're going to see the competition for the tenant is very high. You're going to see the operational costs are extraordinarily high. You're going to see that getting a mortgage to purchase a short-term rental is going to fall probably between 8 and 10% for a 30-year fixed for an investor. And folks, how in the world does a person buying in 2024 make a profit in a short-term rental when people that bought them in 2016 can't make a profit? And folks, if any investor does any amount of research on the capital depreciation that's found recently as so much supply is piling up in the short-term rental market around Florida, why in the world would you go into the marketplace to buy a property that you cannot make a cash flow on, all the while the property is going down in value while you own it? Zoom in on me for a second. Listen to this. Remember that Congress is starting to talk about passing bills in order to get these large hedge funds to sell their property? Did you know this week I've had multiple conversations with agents around Florida saying that they're doing mini appraisals for hedge funds? When I say mini, I mean miniature appraisal reports that the hedge funds have requested that the agent provide them so that they can make a determination on when they should bring their houses to the market this year. Folks, what that tells me is that even the hedge funds are seeing the writing on the wall. They're seeing their insurance is going up. They're seeing that their taxes are going up. And folks, it's one thing to have your home go up in value, but it's another thing that when your home goes up in value in Florida and you are an investor, you are faced with fast climbing taxes that absorbs the money coming in off your property, because oftentimes those taxes can leap much, much faster than you can actually increase the rent in order to make that money up out of the tenant's payments. So what do you have happening, folks? You have investors en masse saying, I want out of this. This equation doesn't work for me anymore because nearly half of the money coming in on my property is going out to service taxes and insurance. And ultimately, folks, that is going to push many, many more homes on the market competing with the same individuals, just the regular mom and pops that have to sell and relocate to a different state, or they need to move across town to be closer to a different job. All of these things are going to start to change. And folks, you got to understand that we've seen interest rates get about as low as they're going to get in the near term. These rates, folks, right now, they were 8% in October. The 30-year rate fell to where it is now in about 45 days' time. It went to 6.7% on a 30-year fix with excellent credit. You got to understand, folks, that's the bottom of the cycle. In all likelihood, that 30-year fix is going back up over 7% in the next couple of months. And it's probably going to go even push towards 8. Now, I don't expect it to be much higher than that, but listen. As the interest rate fell from 8 to 6.7, do you know what that did to buyer applications, right? Think about it. Okay, Jared, the interest rate's now 6.7. Buyers love that. They've got to be coming out of the woodwork and applying for mortgages. I'm sure that the contrasting new low interest rate has people gunning to go to the lender, borrow some money, get approved, and go pick out a house. But you'd be wrong. Last week, even as mortgage rates dropped to where they are now, do you know that we're now nearly 20% in mortgage applications versus last year? Less buying applications translates to why our sales are so low. So what's happening, folks? The reason why inventory in Florida is stacking and stacking, it's not due to a deluge in new listings hitting the market. That's about to come. You're about to see a whole lot of people planning all of these things out and saying, hey, the math doesn't work out. I gotta get out from under my property. Fast forward the fact that we're supposedly entering a mild recession. If you do a fast Google search, you're gonna see that many companies are announcing and enacting layoffs right now. There are jobs being lost. Many of Florida's top metros, when you look at Miami, Jacksonville, Tampa, and Orlando, many of them are up nearly 0.5% in unemployment. Now, Florida is generally hanging on better than the national, but folks, we are on a 6-month trend of a creeping up unemployment rate where people here, even in the Sunshine State, are now going for unemployment bennies. And folks, you know, if you watch my channel, that historically, unemployment rate rising pushes more and more housing. In fact, it is one of the biggest shifts. When you see recession hit, unemployment rises, people have to liquidate their most reachable access to cash, which for most of these folks is their house. As you start to see inventory increasing, folks, listen, you got to keep an eye on your area, because here's the deal. All these areas in Florida, many of them are doing okay. Some are doing far worse. You may or may not be in trouble until you look at how fast and how many homes are able to be absorbed and sold off where you are, folks, because there's a lot of areas that are shifting. Tampa isn't doing as good as Orlando. Jacksonville is doing worse than all three. Miami leads the pile. And ultimately, folks, if you say, Jared, you said Jacksonville is the worst of all the four. Why is that? Their homes aren't selling. You look at the pace of how fast homes are selling off. When they don't sell, more are sitting there, then more the month after that. Then there's an anxiety building among sellers. Then there comes a price reduction pattern that's almost virulent. Everybody kind of pays attention to what the other guy does. They do it more aggressively. And ultimately, as soon as the neighbor sells their house at that new low number, that's how real estate works. That sets and dominates a value that you have to live by and will predicate in something you have to look at for interest in your area for the next sale. And folks, in my area, I'm in the Orlando market. We are the hottest non-Miami market. So if you kind of threw Tampa, Jacksonville, Miami, Lakeland, all in the pot, we'd be considered the hottest market across all three. And folks, what is happening is we are starting to see more motivated sellers even in my market. And folks, what this means is all the people that have been listing their house up until now, you've been hearing the stories. If you shop Zillow, you shop Realtor.com, you see all these crazy asking prices. You see people that just throw a number on the wall and it sits and it's there for 5 months and you're going, what are these people doing? They don't price reduce. Their agent plays little games where it shows a $2 price reduction just to flag a notification. You're like, what are they doing? They're high. Here's what's going to happen. You got way more inventory on top of those houses now. They're buried to a degree that hasn't happened in 4 years. Now you're going into 2024. There's going to be even more listings buried on top of both of the two existing tiers, if you will. Just a higher pile of properties to consider. And ultimately, folks, the agents that are with it, that are working in this market, is telling the sellers, you are crazy. You aren't going to get it. And ultimately, the sellers have to go to a rank amateur if they're going to overlist their house. But a lot of agents, I'm hearing them right now saying, hey, you know what, Jared, this dude called me. He's already been on the market with 2 other agents. He's $500,000 overlisted. He's asking me to do the same thing. So the good news is that there's at least an arriving consensus among the professionals that are educating the marketplace, who's been largely just paying attention to this greater narrative of multiple offers on everything, waiving all contingencies. Buyers have no appraisal, $50,000 over ask. The sellers that are living in the era of 2021, that is starting to be shifted because the public's being told, look, you're going in this market, you need to plan for what is about to happen. A passing thought too, when you consider the mortgage rates are around 6.7% as we start 2024. Do you know where they were in 2023 the same time? They were around 0.5% lower. They're 6.1 or 6.15. Now they're 6.7, okay? Folks, can you believe that right now, the only record being set in the mortgage side of things is refinance? So there's nearly 40% higher refinance application with a higher interest rate than same time a year ago. That is a concern, folks. That still leads me to believe that people are starting to turn to the cash ATM. A lot of the refinance is rolling in high interest credit card debt, folks. And folks, the narrative out here that we're getting ahead of inflation is a joke. The most recent inflation numbers that came out in the past 10 days showed food is still a record high. Shelter, that is our housing situation, is still pushing inflation well beyond the numbers. So folks, food and inflation are still not under control. You can read the stories where you have people that are able to purchase a home. They have some disposable money. They look at how expensive everything is and they say, with the rest of the money I have left over, do I want to buy this junker house to live in at that price, with that payment, with these high interest rates? And they say the answer is no. The Wall Street Journal report came out and said the more affluent people are, the people that make over 50,000, very few of them are buying, they're renting. The people that make over 100,000, even more are choosing to rent. The people that make over 200,000, over $1 million, the affluent are literally saying, forget this, I'm choosing to rent, not because I can't get into the purchase, I choose not to. And folks, I'm in that situation. I own some real estate, but not what I live in. The house I live in, I'm leasing right now because I'm saving around $2,000 a month over what this house would cost me if I were to purchase it in today's marketplace. And folks, the Wall Street Journal and others at the same time are reporting the opposite for the people that strap on and buy a house right now. There was a story in the same article that talked about this family that went out in Oregon, bought a house because they liked it. They had a $750,000 property. The interest rate's like 7.25%. And they literally said, we can't eat out anymore. We can't buy extra clothes. Our life is immediately no frills because the cost of everything, they're up to here in the housing expense. Think about the future of housing prices in Florida. Are they going to continue to go up, or is there a likelihood that the future is a softening price in Florida? Think about it. And folks, your answer has to come from the economics. What are the economics? The economics are, we are frozen. How is that evidenced? Inventory is climbing because buyers aren't buying. Well, Jared, how did our price go so sky high over the past 3 years? Well, a lot of it was investors. A lot of investors came in, purchased and resold, and all that flipping back and forth. This happened a ton in the short-term rental market. What happens in all the markets in Florida as buyers stay on ice? Well, you have what's called month of supply. How many homes are there to sell if no one lists more real estate? How long before the next person can get their home sold? How long will it take? Now, folks, you gotta understand, we've been around 2 months of supply for the past 2.5, 3 years. Now we're at 4 to 5 months, 5 months plus in Jacksonville. We know in history in the last 2008 housing down cycle that when any market gets 7 months or above, meaning there's a 7-month plus of supply, if all homes stop listing based on how many are for sale in my neighborhood, it'll take 7 months to work through all these, that is when you start to see significant rollback in price. Folks, listen to me, excluding Miami, Tampa, Jacksonville, and Orlando. The other 3 major metros were all 2 to 3 months of supply, folks. Right now, folks, these being the hottest metros in Florida, highly dynamic, fast moving, lots of buyers in those markets. Listen, they've gone from 3 months of supply to now 4.5 in a very short period of time, folks. And again, Jacksonville's +5. As I said earlier, depending on where you are in those markets, as exemplified. Remember what I told you about the short-term rental market where you have homes that drop $200,000 in value in like 14 months. You had short-term rental townhomes that went from 330, 340,000 to 280. That's what, 15% in a year? Folks, that's because the months of supply, that means how many homes are sitting there and how many buyers are absorbing them at the exact same time, went and tripled. And as I mentioned before, folks, you need to know your numbers. You may be in a very tight section of the market. Your house may fly off the shelf because there's so few homes for sale. And every time a home goes on the market there, your homes sell off very quick. But I'm telling you folks, there's a lot of pockets in Florida. For instance, the Southwest from Naples all the way to Sarasota, those areas have big numbers of real estate hitting and sitting on the market and not selling. Even in my area, the Central Florida corridor, if you look at Redfin and look at all the major metros here, we have indicators that I watch, which one of them is off the market in 2 weeks. That's a measure of how many homes hit the market and sell nearly instantaneously, hence under 2 weeks. Folks, many of the metros across Florida are down. They're down 4-year lows. So if you are buying here or if you're selling a home and pricing it for the market, you need to look and see what your competition looks like. How are they pricing their homes? How are they selling? How steep is your competition? If you're a buyer and you make an offer for a home and it's a good offer and competition's deep, you may just need to tell the seller goodbye and let them learn the hard way. They'll eventually reduce in time or they'll pull their home off the market. But either way, you need to make sure you don't overpay as we start to shift in a buyer's market, because there's always a lag time, folks. There's always a lag between all this inventory starting to pile up and the seller's actually getting a clue for what's going on. Sometimes they don't have an agent that's on their side helping them understand, hey pal, you're deep in inventory, you should reduce the price. Or sometimes it's the seller. The seller is being told that, but they're firing the agent and they're actually not responding to doing what they need to do to get the house sold in the market they're in. But I will tell you right off the bat, as I mentioned, if you're in the Southwest, you do not want to price your home loosely. That is, you need to do your research and you need to get that price right. Make sure that if you have to sell, if you're putting your house in the market because you really need it liquidated, you do not mess around with loose pricing modeling and testing the market, just seeing what happens. This isn't the market for you to build a 90, 120, 5-month time on market where everybody is now looking at a lot of homes for sale and they're wondering why your house has been on the market for 5 months. That's when they start asking how many times it's been flooded or if it's haunted. And none of that's good for you or the eventual price that you're gonna walk away with. The same thing holds for the short-term rental market and those of you in Jacksonville. If you're in the short-term rental market and you aren't making money on your rental, and at the same time your property is in a downward spiral on capital appreciation, you might want to check your mindset, because some people are willing to lose money simply because breaking up with a bad investment can be hard to do. Now folks, briefly, because I get asked all the time, what's going on in the foreclosure data? Foreclosures are still slightly climbing off the bottom. You'll remember back in 2020, going into 2021, foreclosures, defaults, all those hit bottoms as everybody had money, everybody has equity. So delinquency rates were incredibly low, but they've been climbing, folks. They're still historically low. They're not even back to 2019 levels. They're still below 2019. So nothing to stress about. However, in the news, pertaining to our state is Florida is in the top 10 for per capita delinquency filings, and Lakeland made the top 5 in terms of cities, and that's Lakeland Metro. So that's Lakeland and a huge section of Polk County, I think almost going to Haines City and going towards the Disney area. So that's a big area. That area is starting to see foreclosures climb in relation to all the other metros in the US, that is. That's Lakeland. But again, the totals themselves are very low in comparison with history. Now, a last word for those of you that say, hey, Jared, I know how this story ends beautifully. You are not considering the fact that didn't the Fed come out and say he's going to cut interest rates? So what's going to happen is your little mortgage rate's going to go back down to 4.5%, because that's what my realtor buddy said. And then everything's going to shoot through the roof again. Folks, there's only one problem with that, is that when you look at the data, when you look at unemployment, when you look at how bad inflation data is right now, inflation is not positive. Even though our leadership, our US government is coming out and kind of doing victory laps saying, hey, everything's down, nobody's buying it. Everybody knows my food's expensive, my house is expensive. Folks, we are still 4, 5, 6% over last year. Food and shelter costs are high. Now, I believe there is a reprieve coming, particularly for rents, particularly for the apartment sector coming into the year ahead, because there's so many apartments about to dump onto the market. Vacancy rates in the apartment sector is already coming. But hey, is that exciting news for the rest of us? I mean, does everybody want to be the renting class permanently in an apartment of all things? No, that's not healthy for the economy. Ultimately, folks, the Fed is handcuffed by the inflation data. And right now, prices are still too stinking high, because if they were to raise them right now with the meager recessionary forces that is starting to manifest, the real problem is inflation's still sticky. The central bank still can't manage it, which ultimately leads folks higher for longer. The interest rates that are in place, in all likelihood, there's a good chance they won't be raised, but they're going to be higher from here for longer, which means according to this observer, you're going to see interest rates largely between 6.75 and 7.75 on the 30-year fix, probably until the third quarter of this year. Folks, as I said already, buyers, particularly in Florida, looking at today's asking price at those interest rates, said, forget it. Ice cold, I'm out. By the way, if you are considering selling a house in Florida, this is only in Florida, list for 3% with NestShare. Link is in the description. Save yourself thousands in real estate commissions the next time you sell and get full service top broker support end to end. We'll see you on the next one.